and welcome to Pro Trader Strategies Market Commentary for Monday, September the 28th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the overall markets with my market analysis. And I'm going to do the same thing for you folks, but I'm going to go a little bit further and talk about these option strategies that I'm implementing into my portfolio based on those assumptions we come up with on that market analysis. But we aren't just going to go out there and pick option strategy out of the hat on any given day. No, what we're going to do is look at these internals of what's going on around this underlying that we have a given assumption for, and find the right strategy, the optimal strategy for that directional move. All right, so what we're trying to do here is set it up so we're turning the tables in our favor in order to be successful with trading options. That's only one of the few, or the best way, I should say, to increase your overall yield in your portfolio is by using options, not just going out there and having an overall long portfolio of stocks. Just 100% long deltas is what we call in the option world. We need to add some negative deltas to that and take advantage of some of the leveraging aspects of those option strategies. All right, so without further ado, let's get on with the economic data, see how that's impacting the overall markets. Yeah, it is a Monday, and we don't usually have any economic data, and that is true for today as well. But we do have a couple of people speaking. Earlier this morning, we had the ECB president, Lagarde, speaking, and Mester here in the United States, who is an FOMC member. Nothing really to see there. As a matter of fact, Mester's probably talking right now, but I'm not really seeing anything affecting the markets here. We are seeing equities make some big moves today already this morning. Let's not get on to the equities right now. Let's quickly talk about crude oil up into the 40s, right there at the point of control, building out a big, nice volume node there. I think we're going to see this paradigm shift where we see the volume node start to move down. I'm actually surprised it hasn't moved there, but I think it's because we're seeing so much volume up in and around this area of the mid 50s that it's kind of holding on to that point of control a little bit higher there. Gold futures trying to make a comeback today, moving up $11. Again, I'm very surprised we broke below and out of the 1900 handle. I was really surprised about that last week. I think I talked about that quite a bit. It's a pressure point where people were kind of seeing that we aren't going to get that new economic stimulus, which is that geopolitical stuff that we're talking about. Well, if we don't have more money being printed, well, that's going to cause a little bit weaker here in the gold futures. And then we go on to the bonds. They're right there where they should be. 177 handle, I've talked about that. Yeah, albeit we could see it downtick just below that at any given time. I'm more concerned about it staying above this 176.20 area. As you can see, we just broke that 177 handle. But again, right there where we are expecting to see the bonds kind of stay for the foreseeable future. We're hearing these Fed governors saying that they're not going to raise interest rates anytime soon. Well, that doesn't allow the bonds to start coming off, because remember, as the bonds come off, then that means interest rates rise. It's like that teeter-totter I talked so much about. It's directly correlated. All right, VIX is moving higher despite the fact that the equities are across the board up nicely today. I believe Dow Jones, before I came on here, is leading the charge to the upside, up a 1.75, up almost 500 points on the day, up 470. Right in between those 2 points of control that I've talked about. Yeah, they are separated a little bit, but this is the comfort zone for the Dow Jones Industrial Average, or the blue chips there. NASDAQ is moving higher by 1%. It's kind of lagging on the day. And something to note here, this 76 Fibonacci is acting as resistance. Yes, we did pop above that, but it's lining up with that 50-day simple moving average. Now remember, when we get below that 50-day simple moving average, that is signaling a little bit more of a longer term bearishness. Yes, we have gotten above the 9-day, which is short-term bullishness, but overarching, we want to look at that longer term trend, and that being below the 50-day is going to trump that 9-day for the most part. Also, we have that lining up quite nicely with 11,250. That being said, I've talked about this. It seems to me like, the target is going to be to go down there and really press the longs by going down and testing that 10,250, 1,000 points below where we are now. Yes. Is that going to happen? That would be another 10% correction from where we currently are. So that would really be something that would be putting the thumb screws on people. And as we talk about, or a floor saying was that, the market will hurt as many people or the most amount of people most of the time, or something like that. I can't think of exactly what it is, but it's something along those lines. All right, we've got the E-mini S&Ps up 1.5. Like I said, NASDAQ lagging on the day. Again, E-mini S&P is pressing up against that 50-day simple moving average there, that acting as resistance. And we've got the point of control just slightly below where we are right now. That is where the comfort zone is. So I think that we're going to maybe see that kind of bounce back and forth here for at least the short-term time frame here. Now look at this chart on Friday. Just a blast off the top. The shorts really got on their heels and panicked to get out, and you can see even overnight just an upward trend here. No attempt to flush the guys out during the day session. It's pretty quiet though for the most part, being a Monday, and not a whole lot of economic data to drive this market, but we are just kind of stuck in a rut, it feels like, where the market just can't break out or below in either direction. Can't really come up with a discernible direction today. But with that being said, and this calming effect in the market, it's allowed me to get out of a lot of these stocks, which are the millennial stocks that they've been talking about on mainstream media quite a bit lately. And with Apple, if you guys remember back on the 10th, which is right around here, I decided, it would be a good location or a good time to maybe add some Apple to my overall portfolio at the 100 level. So I was looking at the October, selling the 100 puts, because as you can see, we have really high implied volatility. Here was the 10th. And I was expecting volatility to come out. Yes, I did get volatility to come out quite nicely, but I also had the directional move against me, which, hurts that overall position. I'm short puts, which means that's a bullish move, but the volatility coming out helped me quite a bit. And that theta decay was the thief in the night, helping me out with this trade, because we're getting into that zone where we get a lot of theta decay happening. So doubly helping me there with the volatility working in my favor. Theta working in my favor. Yeah, the directionality was wrong, but I love being directionally wrong and making money. And just like with this trade, selling those October 100 puts for $1.49 and buying them back for 75 cents this morning was quite nice to see. We got that move, like I said, in my face, but having all of the other things in my favor allowed me to get out of this trade rather quickly. So Apple, I am flat with that trade. If we get a bit more of a pullback again, I'm going to continue to I'm going to probably, depending on volatility, obviously, and the premiums that I'll be able to get, continue to look to sell some of these 100 puts, because I think that the market is really going to support that level if we were to get down there and test it again. It's the value area high, and yes, I talk about this all the time. The point of control is way down there at 80, but I don't think that Apple is going to get down there that far. It is one of those millennium trades where the millennials are loving it, and it's one of the top performers right now, especially for the tech sector. All right, and then the other one that I did was Amazon that I took off. I only had this on since Thursday, and Amazon was quite a nice trade here. As you can see, got that pop happening. And again, I entered this trade on the 24th, so that was Thursday. I caught it relatively close to the lows of the day, but again, went into that October because I want that theta decay. And if you think about this, the theta on this particular trade is about $1.25 a day. I'm shooting from the hip there on that kind of pricing there. And volatility is 92 cents per 1 percentage point. So if we take a look at this trade where I got in, at relatively high volatility, because that's why I'm selling premium. I'm selling volatility. I got volatility coming out. So you can see that it actually dropped by, 2 or 3 percentage points on that trade. And that's about 92 cents per tick. But on this one, we got the move correct and got that basically picking that bottom there on Thursday, and it's done nothing but rally almost 150 points since then. So that was ultimately the catalyst to allow me to get out of this for better than 50% of max profit, which is what I usually look to get out at. But today, with that big pop happening, I actually got out when we were up almost 55 points on the day. So $55. It's come off since then. And again, with Amazon, I'm going to look to do the same thing with it as I did with Apple, because it still has that high volatility. I'm going to continue to look to sell those puts if we get a big pullback here in Amazon as well. So in the October, sold the 2,700 puts, or actually 2,700 puts in there for $28.50 on Thursday, as we talked about. I was able to buy those back today for $11.70. So better than 50% of max profit there, but that's because we got that big pop today, and that really allowed me to get out of this for better than 50% of max profit. Friday, it was pretty close, not quite there, but today with that big move, was able to get out nicely when we were up testing that 50-day simple moving average. And as you can see here, again, that's why it's important to have that 50-day simple moving average on your charts, because it doesn't always necessarily line up with Fibonacci every single time. As you can see here, we'll just throw up a Fibonacci. I don't think that 50-day lines up with Fibonacci at all. I'm going to do this quick and dirty if I can right now. And as you can see, there's no Fibonacci there. We did bump up against the Fibonacci on Friday and then popped to test that 50-day moving average today. All right, so that's all I've got going on today. Just covered a couple of trades for winners, which was nice. One being directionally wrong, which I love. I actually like the Apple trade better than probably the Amazon, because of the fact that it is a beautiful day when you are directionally wrong trading options and winning at the bank right there. All right, so that's all I got for you guys so far today. Hope everybody had a great weekend. Last thing I've got for you guys is our disclaimer. Please take a moment to go over this, and if you can't take that, take it easy.